Hey guys, this is Casey. Today I'm going to cover risk management with you, and I want to touch a little bit more on uh, what that involves. I know I've covered a little bit of it, but I don't think I've touched enough on it. So, getting started with risk management, um, this is going to be geared a little bit more towards the short-term approach rather than long-term, simply because the short-term approach is what I'm using right now to generate my income off of, say, day trading with the FOREX, foreign exchange market, and some volatility ETFs. So it's what I know, and it's been working for me. And so I want to just go in detail with you, kind of like what I put together as far as a risk management plan when I'm, trading large amounts of money. Um, so just think of risk. First off, just think of risk as the amount of control that you have. Okay, so risk equals the amount of control. All right, the less control you have, the more risk you have. All right, and vice versa. If you want less risk, just make sure you have more control. And you can do that with technical analysis, which is like reading charts, or you can do a fundamental analysis, which would be like reading the headline news. For instance, like today's May 22nd, it's Friday. Janet Yellen's going to come out this afternoon with an announcement on the outlook of the economy. All right, we don't know if she's going to touch on stuff from the past or things in the future, but that would be fundamental analysis, and that can have an effect on whether the share price of something like the volatility ETF goes up and down, or even a stock, for a company. So that would be technical and fundamental analysis, which will give you more control if you know what you're doing with those, which equals less risk. All right. So just something to keep in mind there. The other thing is only play with what you can lose. All right. So I'm going to cover margins here, just real quick. If you're not familiar with what margin is, basically what it would be is like, for me, for example, I play with large amounts of money. So I try to make sure that when I'm trading with large amounts of money, that I'm only playing with like a 5 or 10% margin, especially like on FOREX or foreign exchange markets. So, for example, like with $10,000, you only want to use like 5 or 10% margin, so you'd be playing with about $500 to $1,000 on that 10,000, and that's what you would use to trade. The rest of it sets aside. It's set aside. You don't touch it. So that's margin, and the reason why you want to use a 5 to 10% margin would be because, again, you want to keep. If you do lose some of your trades, which you will, you want to make sure that you still have enough money to play with and make future trades. All right, and that's something I'm going to touch on here with exit strategies. Okay, how much are you willing to lose? And we covered that, and I've asked that question in a previous video. But a lot of that has to do with your emotions. Okay, you got to control your emotions. So if you're losing and you're down on a trade, don't get freaked out. Don't get freaked out, because if you're using 5 or 10% margin, like we talked about, you know that you still have money to play with. All right, that's not being used. Secondly, though, there's always room for another trade. So you got to stay positive when you're trading, and you need to have conviction when you're trading as well. Be confident, because again, a lot of it is psychological, and then the other portion of it is your emotions and dealing with your exit strategies. If you're asking yourself when you're trading, is this, oh man, I don't know what it's going to do. I can't tell if it's going up or down. And let's say you're already in the trade, you already put money down. Keep your emotions under control. Don't freak out. If it drops right away, okay. If you've got a stop loss in place, which I'll cover here with you in a second, then you'll know, okay, if it hits that price, I'm out. And you just do away with the money, take your hit, because guess what? There's always going to be another trade. You can win it back. And I've done that several times. Alright, so that's in your exit strategy, using your margins. I want to cover insurance with you again. We've touched on this before, but it's important. You need to have a tool to make money in down markets. So like if you're long-term investing, buying stocks for the long term, let's say the market goes down, your share price on that company can go down. Well, you want to be able to make up for those losses with something else like gold and silver, or ETFs that measure volatility. All right, they're forms of insurance. It'd be like if, let's say, you buy insurance for your car, right, in case of a wreck, or you buy insurance for your home in case of a fire. You want to make sure that if that ever happens, you're covered. So it's the same concept with money management, risk management, when you're trading on the stock market. And then again, the margin. We were talking about 5 to 10% margin when you're when you're placing bets or trades on like a large amount of money that you have to invest with. You can use stop losses, especially like on the foreign exchange markets. Some of the brokers will offer stop losses, but those are usually on options. So like if you're just planning on buying a stock or like a company share price, like the shares of a company, and you just want to simply sell it, for a profit as it's going up. The brokers I use personally don't offer the stop loss on those. I know that some of them probably do. So if they do, that's great. You can go ahead and use it. But for me, they don't. The stop loss is used on options through my broker, or I can use it in FOREX, currency trading. So, and basically what that is if you buy let's say you buy Euro USD on the foreign exchange market, right? And you buy in at a certain price, say like $1.10, and you place let's say you pay. Can't even talk. Let's say you place a trade, and it's going up, right? So you buy Euro USD, and you want to go up to like $1.11, and you'll take your profit. Well, let's say it goes down, and it goes against you. All right. You can place a stop loss, saying, okay, I'm only gonna, if it hits $1.09, I'm done, and it'll automatically do it for you, and that's what a stop loss is. Or you can do it manually as well, if you're watching the charts and you're doing some technical analysis. But again, stop losses, equal amount of control. I know some pros don't even use stop losses. Me personally, I've been playing with them a little bit just to see how they work. And I've tried the no stop loss as well, and I've found that I win more when I don't have stop losses. And the reason for that is I use trade reversals. So in other words, if I buy the Euro USD and I'm thinking it's going to go up, and let's say it goes against me and it starts going down, what I'll do is I'll place a trade immediately going the opposite direction. So I'll place a trade going up so that I'm making a profit while I'm losing on this trade here. Alright? And what ends up happening is you can trade your way out of your loss. So if this one goes up, and it keeps going up, then that's fine. You go ahead and take your profit. That trade's done. Alright, now let's say this one's going down, and now this side's going down. You can place another sell and start making a profit on it going down this way. Alright, as it's selling, this trade here that you made, okay, going down, is going to start contracting on losses. So you'll start going into a profit range on your losing trade. And then you've got profits going on your second trade as well. And what you do is you just follow the trend, and keep placing bets with the trend. And eventually what you do is you trade your way out of your loss that you originally had. And that will be a trade reversal. Okay, now it's pretty advanced, when it comes to the strategy and tactics used on that. I'm still experimenting with it right now, but it's working. So I'm going to keep doing it, try to get better at it, The other thing I want to talk about is with higher risk, there's higher reward, and there's also higher losses. Okay, so you can make a lot more money, but you can lose a lot more money too. Alright, so that's something you want to keep in mind if you're playing with large amounts of money, I know with like my ETF trading that I do, I get pretty aggressive. All right, and it's because I'm a younger guy. I've got a lot of time to make up for money that I lose. So my personality is going to be a lot different, and my tactics and strategies are going to be a lot different than, say, somebody who's like 56 or 60 years old. Okay, because they can't afford to lose money as much as I can. So I'm super aggressive right now. Like, I know with my ETF volatility trading, my margins are a lot higher than 5 or 10%. Okay, but also I know a lot more about what I'm doing when it comes to technical analysis, fundamental analysis, as well as controlling my emotions. So if I do lose, I make sure that I have enough money to keep playing. Alright, so I'll just take a loss and go back in and make it all back up on trades in the future. Okay? Now with lower risk, okay, if you're somebody who is a little bit older and you're not as aggressive, then you can be more conservative with placing your trades, the amount of money that you're using when it comes to your money management and your margins, and you can go with like 5-10% margin. But again, the lower the risk, the lower your reward is. So it's kind of, the analogy I'll use is the rabbit and turtle. You're going to be that turtle, slow and steady wins the race, and it's more of a long-term type approach instead of short-term. So, your rewards will be lower, but guess what? Your losses are going to be lower too. So you're not going to lose as much money. All right? And that's basically it, guys, when it comes to risk management. Okay? It's a pretty quick video. If, again, when you're trading, make sure you have your emotions under control. If you ever second guessing yourself or doubting, what you're doing, sometimes I won't even trade. Like, if I can't really get an idea of like what it's doing, I just won't trade. I'll go on to something else. Like in the exchange currency market, if I'm trying to place a trade on the Euro USD, and excuse me, if I don't know what it's going to do, as far as going up and down, I can't predict where it's at, I just won't trade it. I'll go on to a different currency. Alright, so that's an example of what I'm talking about when I don't even trade sometimes. Again, it's your emotions. Go with your gut. When I say have some conviction in your trades, go with your gut. Because again, a lot of times your gut's right. And with the strategies that I'm doing live trading on and doing simulation trades with, right now, on all the tools that I use with FOREX and volatility, I don't have any one of them right now when it comes to my live trading that has less than a 75-80% win rate. Okay, which is pretty good. That's pretty good, and all of them are in profit. My simulated trades that I do are just the same. I don't have one of my tools that I use in my simulated trades for practice that I'm doing, which are dealing with live markets, that has under a 75-80% win rate. And a lot of it is emotions and having conviction when you're trading. Okay, so just some things to remember when you guys are throwing money on the table, because I know it can get nerve-wracking, and sometimes, you're never going to be able to know the markets 100%. You never will. You're going to be wrong some of the time. So it's not necessarily knowing what you're going to do when you're in profit. It's more important, what do you do when the trade goes against you? Okay, and if you can handle that, and your approach, you're going to be prepared for it. You may take a hit and lose some money, but guess what? You haven't lost all your money, and you can jump back in and do future trades. So that's it for today, and I'll release another video here soon covering more in depth with technical analysis and fundamental analysis, because there are some strategies to that stuff as well. Alright? Anyways, take care, guys, and I'll talk to you soon.